and welcome to Finextra. I'm Thea George and I'm here with Marc Recker of Deutsche Bank. We're at EBA Day 2016 in Milan and we're talking about correspondent banking. Marc, thank you for joining me.
Thank you.
So tell me, Marc, what do you see as the key factors disrupting the correspondent banking business?
Let's say one of the key factors, let's say in total I see three key factors. The most prominent one is really the client experience. When you see client experience is driven by, let's say, social media about the speed of our, let's say, regular life, you see translated into correspondent banking is that a retail client wants to do something instantly. They can use today non-bank PSPs to transfer immediately funds across the globe. If that same person would work in a company as a CFO or treasurer, he wants to translate that into the company as well. And there it comes to the point is how banks can really cope with these new expectations. So client experience, client expectations are definitely going the way that is disrupting correspondent banking. The regulatory piece as well. Regulations is not about new upcoming regulations, it's about the cost, how to cope with new regulations. Are you ready to invest? And the last but not least is also the technology piece with the new upcoming technologies that is definitely increasing efficiency in correspondent banking in the near future.
Okay. And what do you think are the challenges and opportunities that disruption creates for incumbent providers?
Let's say there are definitely, some challenges because incumbent providers are not used to the speed of change. When you see, for example, like we have to act to be compliant with a regulation. Take the example of Payment Services Directive 2. The first draft came out in 2013, it goes live in 2018, 5 years' time. When you see the trend of the economy outside of the banking sector, it goes much more faster. And I think banks need to adapt to that. That could be a challenge. But I think there is also a lot of opportunities because if you want to stay in transaction banking business, and that's really a strategic decision that needs to be taken by a bank and supported by the board of the bank, then you have, let's say, in our opinion, a very valid business case for the future. You can collaborate with technology companies to deliver the best solution for the clients. Challenges at the end is how to cope in the future also with KYC and with other regulatory requirements. Those burdens, they don't go away. The responsibility lies still within the financial institution, but you have to work with other banks, with the community, like we did a few years back, Swift KYC registry. You see now other initiatives where you can do as an industry much more things than you would do on a standalone basis.
So how do you think banks can deploy technology to stay ahead in the correspondent banking business?
I think correspondent banking is a bit a different kind of an animal. When you look at correspondent banking, due to the global impact that correspondent banking has on the industry, it's really first think about the non-technology piece. We had this initiative, GPII, launched last year at Cybos, where banks across the globe, transaction banks, put their heads together to define a multilateral SLA between them to really bring up solutions for speed, transparency, and traceability of payments. So the first step that banks need to do is setting up the framework. As a second step is really deploying technology that is really creating a sound and safe future for correspondent banking at a longer term.
Marc, this has been great. Thanks again.
Thank you.
And thank you for watching.